Hello, and thank you for joining us here at XM.com. I'm Cristina Marujos, and joining me today is Senior Analyst here at XM, Rafi Boyajian, and we'll be looking at the week ahead. So let's start from down under. We're expecting the Reserve Bank of Australia to hold its policy meeting on May 7th. We're expecting exactly the same the next day by the Reserve Bank of New Zealand. And we're expecting them to make a close call amid a weakening inflation picture in both countries. So what should we be expecting by these policy meetings?
Well, as you said, inflation in both countries has weakened in the first quarter of this year, but the RBNZ is closer to cutting interest rates next week, so we could potentially see a 25 basis points rate cut by the RBNZ because apart from inflation, the labour market has also weakened somewhat in the first 3 months of this year. In Australia, it's somewhat of a different picture because the labour market remains fairly strong there still, so the RBA might resist cutting rates so soon. They might decide to wait a little bit longer, but nevertheless we still have plenty of speculation in the markets that if not next week, then at least in one of the upcoming meetings there will be a rate cut by the RBA and the RBNZ, and that's why we saw the Australian and New Zealand dollars being the worst performers this week.
Well, moving into China now, the market has been facing some upheaval lately, especially with the recent PMIs not meeting the April expectations and with a year-long trade war with the United States. But we do have some indications that the two countries may be reaching an agreement soon.
That's right. We had one or two reports this week suggesting that there could be a trade deal by the end of next week. We don't know how accurate those reports are. If we do get a deal, that would obviously be positive for risk sentiment, but apart from trade talks, we do have trade numbers coming out of China for April next week. In March, we saw Chinese exports rise strongly, but that was mainly due to the distortion from the timing of the Lunar New Year holidays. So the April number might be more significant in terms of whether or not there's still a significant impact from the trade tariffs, the US tariffs on Chinese imports, and that would be interesting to see, especially coming after those weak PMIs you mentioned.
Well, let's move into Europe now. Things have been fairly quiet on the Brexit front, at least this week. And the Eurozone economy grew faster than expected in the first quarter of this year. So how is this affecting the UK GDP data, and what should we be expecting in the coming week?
Well, as I said, we saw unexpected rebound in Eurozone growth in the first quarter of this year. UK growth is also expected to bounce back. Of course, the Eurozone slowdown hasn't been of much help to UK growth on top of the Brexit uncertainty. But positive UK GDP numbers next week could give the pound a bit of a boost, especially following the Bank of England policy meeting this week, where Governor Mark Carney warned markets that they're underestimating the chance of a rate hike later this year. So a positive GDP number would would boost those expectations. But Brexit will still likely be the main focus for the pound next week because Theresa May has set a deadline of the middle of next week for the Conservatives to make significant progress in their talks with Labour in breaking the Brexit deadlock. So if there's no sufficient progress next week, the two sides may decide to abandon their talks, and that would be quite negative for the pound, at least in the short term.
And finally, let's have a look at the US dollar, which managed to rebound sharply after the Fed meeting. What should we be expecting? Is there something on the agenda this week that could help the US dollar keep this winning streak?
Well, it's going to be somewhat quieter on the U.S. economic calendar next week, so it's quite possible that the dollar rally may run out of steam. We're only going to get inflation numbers. Those are going to be the main highlights. Inflation, the headline and core inflation are expected to stay close to 2%. That's somewhat higher than the core PCE inflation, which the Fed watches more closely. So we're not expected to see big reactions in the U.S. dollar, at least not from the U.S. data.
Rafi Boyajian, thank you for joining me and thank you for your insights on the week ahead. And thank you for watching us here at XM.com.